says something. If it's like very simple.
Yeah, getting pretty good rate on my cost, but my trust wallet. I do it through the staking tool. It's like 14%. Yeah, getting pretty good rate on my cost, but my trust wallet. I do it through the staking tool. It's like 14%. So much better for many places where it's like head of company outreach. I want to put on more of those like one-on-one events, like NFT one-on-one event or something along those lines. That would be responsible. Just shoot out emails on this type of list. Yeah, I want to
Yeah, I went at 1 o'clock. I was wrapped around. The first 300 people, they got us like the ticket. Yeah, it was so weird. So wait, so you just go get the vouchers and leave? I think a lot of the first 300 did, but the rest of the people stayed there. So I like so like 6 hours.
I guess yeah.
That's our years.
That's fine. All right. Yeah. And then we can do.
We can do ours, yeah.
And then y'all. Because it should be like.
And also the live stream was just published in a video after the done.
On our channel.
Yeah.
Okay. Oh, that's good.
Yeah. Here for like events like this and
Oh yeah.
Yeah.
But I think I've decided for the programming portion of the club, I'm gonna just leave it because there's just one area first. Yeah, so I'm gonna tailor it pretty much like I will help train everyone to like prepare the.
Are you guys ready to present?
Yeah.
Okay.
You guys ready?
Alright, thank you guys for coming out tonight. These are our speakers, so they're about to get started. So yeah, here it is, personal financial literacy, modern disruptive tech.
How's everyone doing today?
Very
Great.
All right, my name's Mark. I'm currently the head of programming in the Clemson Crypto Club. And yeah, so my presentation today is what is Bitcoin? How many of you have heard of Bitcoin? Raise your hand if you've heard of Bitcoin. Okay, pretty much everyone. How many of you are confident that you actually know what Bitcoin is? Raise your hand. Okay, maybe like 10% of people. So I am going to solve that problem right now. So what is Bitcoin? Simple. Bitcoin is money. I'm sure you guys know what money is, correct? Yeah. So briefly, I guess I'll go over the history of money. So yeah, before there was money, there was barter. And the problem with bartering is, well, okay, bartering is like when two people exchange two goods, like for one another. So it's like I want your cow and I want and the other person wants the grapes. So that's basically how the exchange of value started. But the problem with this system is there were a lot of people did not have an easy way to, like, if both people did not want the other person's item, then that would cause problems. So the simple solution to that was a medium of exchange. So the first medium of exchanges were what's called commodity money, like seashells, salt, rice, wheat. But the problem with that is like there was a central entity that could basically like get more of it. Like if you were to find a seashell deposit, then you could just go like get all that seashells, then become rich, and then they're all like the entire financial system is gone. So eventually money, actually I'm gonna go right there so I can read it. Yeah, off there. So eventually, history decided on the best medium of exchange was gold. And there's a few really good reasons why gold was the perfect medium of exchange. So why was gold the perfect currency throughout history? One reason is gold is practically indestructible. So if you were to hit gold like with a hammer, like a solid gold block with a hammer, and just hit it over and over again, the hammer would break before the gold does. Gold is very easily divisible through melting. So let's say you have 5 ounces of gold in a gold block, you can melt it down into 1 ounce of gold. So that was a primary advantage of gold. You were very easily able to divide it. Gold is very difficult to counterfeit or fake. Today, there's actually been times of like gold counterfeiting, but like back in the day, thousands of years ago, it was pretty much impossible to do it. So that's good because you want to make sure that what people are trusting as money, there isn't like a group of criminals that are actually counterfeiting fake money, and that throws off the economy. There's a permanently fixed supply cap on Earth. So the amount of gold that is on Earth is fixed, which means the amount of inflation that can be with that particular currency is also fixed. So that's a good thing because with gold, you know that there isn't any central entity like like the Federal Reserve that can just print more and more of it. So it limits the amount of inflation that's possible with it. And that protects people's purchasing power throughout the years. And another thing about gold is it gave people the choice on how they wanted to custody it. So if you wanted to keep your gold in a bank, you could, banks are banks have been around for thousands of years. Like banks have been around since the Roman Empire. So you could store your gold at the bank. Or if you wanted to, keep it for yourself and like hide it in your house or something, you had that opportunity too. So with gold, you had the choice on how you want to custody it. So you may be wondering, if gold is such a perfect currency, then why aren't we using it right now? Well, the thing is, for the vast majority of American history, we were using gold. Whenever America was founded in 1776, we were using gold. Our money was backed up by gold, and our money was backed up by gold all the way up until 1971. And this means that anyone could bring their cash into the bank and exchange it for gold. And they could also bring their gold into the bank and exchange it for cash. And that actually is how paper money was first created. First, paper money was just a receipt saying the bank owes you X amount of dollars at the bank. The bank owes you X amount of gold if you redeem this receipt. So that's actually how paper money was first established. And that's, that image right there kind of shows it. Yeah. Oh, I guess I wasn't finished there. And so gold was the perfect currency, and we were on the gold standard up until 1971, when basically a bunch of foreign countries that owned US dollars, they wanted to redeem their gold they wanted to redeem their US dollars for gold. But since the US printed so much money, and there was too much money printed and then could actually be redeemed by gold, this was not possible for the US to actually, if the US were to have paid off all these foreign investors, then they would have ran out of gold at their gold reserves. So in order to prevent that from causing an economic crisis, Richard Nixon abandoned the convertibility of the US dollar to gold, because before that it was fixed at $35 would convert to 1 ounce worth of gold. And the biggest problem with gold is you can't send gold through the internet. So if I want to pay someone in China, I just send an armored car and truck and trust that the people that are actually sending it aren't going to intercept it. So it is impossible to send gold through the internet. So that's another reason we're not using gold today. Now, you may be wondering, I don't see anything wrong with our current financial system. And I do give credit, our current financial system is pretty good. Like we could pay each other with credit cards and Venmo, and it is pretty good. But there are a few fundamental problems with our current financial system. First of all, inflation is robbing everyone of their wealth. We've currently hit the highest rate of inflation in 40 years. I think it's over 7%. So saving is now an awful idea when it comes to money, because when you save your money, the longer you save it for, the less it's going to be worth. Credit cards are very flawed and they have a high rate of fraud. And the problem with credit cards is when you pay someone using your credit card, you have to then trust that whoever you're paying isn't going to then use your credit card information in order to charge things to your account. So with credit cards, the system relies on trust. And that's good if the person that you're paying, you actually trust them, but they're like, I think last year, the total amount of US dollars that happened in credit card fraud was like $26 billion. And the reason that is because people's credit card numbers would be leaked and people would just charge things to their account. Another problem with our current financial system is if you want to make internet payments, you have to give custody of your money to somebody else. So with cash payments, you can, if you don't like trust the banks or something, or you just like want to have full custody of your money, you can you could just like withdraw your money from the bank and just like keep it at your house. But with internet payments, you have to put your money in the bank first and then charge it through your credit card, which where $26 billion worth of fraud happens a year. And then also by keeping your money in the bank, you do have to also trust the bank that they won't go under. And if you look throughout the course of history, banks have gone under over and over and over again. Like in 2008, there were so many banks that went under because they made dumb investments, and the government either had to bail them out or some of them failed, like Lehman Brothers. Bank transactions usually take a few days to reach finality. Like every time I swipe my credit card, it usually takes around 4 days for me to actually see the transaction in my account. So overall, it's just a very slow process, and it takes a few days. The current financial system relies on many middlemen, such as the Federal Reserve, which is like central banks, other like retail banks, credit card processors like Visa, MasterCard, and remittance companies, which are basically companies that send money overseas. So, it makes sense that all those companies need to exist because they all do something that's valuable to the economy. But every time the money flows throughout the economy, each one of these middlemen takes a certain cut of the transaction. So the bank takes a cut of the transaction, then the card processor takes a cut of the transaction, then the other person's bank, and then the remittance company if you're sending it overseas. So each one of these companies charges a fee, and because and these fees add up and lead to higher prices for the consumer and for companies. And cross-border payments charge very high fees. One of my friends, his father, he's Indian, and he sends money to his family back every time he gets a paycheck. And he said that sending through Western Union, they charge about 20% fees. So that's 20% of his money that gets that does not go to his family and goes to these companies. And another thing is banks are legally allowed to loan out your money that's in your bank account to other people at a profit. This right here is called fractional reserve banking, and pretty much every bank on earth does it. So, and the system is good to an extent because it allows credit within our economy. But I believe that the system is being used a little too much, because with all this credit and debt that's happening with the loaning of money, there's currently more money that exists in the world today that exists in debt rather than actual money. The global amount of debt in the world, I think, is around $300 trillion. And the total amount of money in the world that actually can be used to pay off that debt is $200 trillion. So it's impossible for everyone in the world to pay off debt. So what Bitcoin does is it combines what was so great about gold with the internet. So like I mentioned earlier, one of the biggest problems with gold is you can't send gold over the internet, but with Bitcoin, since it's a digital currency, you can send it over the internet. So, gold is indestructible and Bitcoin is indestructible and the reason Bitcoin's indestructible is because it is a decentralized network of computers, which means there are computers that are running the exact same code of the Bitcoin network on 6 different continents. So if anyone ever asks you like, oh, will the government ban Bitcoin? Well, that's impossible because they would have to shut off every computer that's running the Bitcoin code, and the Bitcoin code has been copied millions of times. It's very easily divisible. A lot of people think you have to own a full Bitcoin. That's not true. You can divide a Bitcoin into 100 million units. 100 million units, the smallest unit of Bitcoin is called a Satoshi. It's impossible to counterfeit a Bitcoin because every Bitcoin is traceable in what's called the blockchain. I'm not going to explain what the blockchain is, but just trust me on that. All right, it has a permanently fixed supply cap, like how gold is a permanently fixed supply cap, which means there will never be more than 21 million Bitcoin. I'm sure you guys may have heard of Bitcoin mining. And what Bitcoin mining is okay, I'm not really gonna explain what Bitcoin mining is, but basically, Bitcoin is a store of value. There will never be more than 21 million Bitcoin, which means inflation will not rob of people's wealth. And of course, Bitcoin can be used for internet payments. And the problem with our current financial system is when you make internet payments, you have to give custody of your money over to a bank first. But with Bitcoin, you can do internet payments and through encryption, because Bitcoin has built-in encryption, you can make internet payments while also maintaining full custody of your money. If you have a private key for Bitcoin with the encryption, and you are the only one that knows that private key, then nobody can steal your Bitcoin. So that would be the equivalent of people that buried their gold underground. And because of that, that means it's also censorship resistant, which means the government then can't seize your Bitcoin. So people that are using Bitcoin in hostile foreign countries, then their corrupt governments could not actually seize their money like how they could in a traditional bank account. Yeah, in Bitcoin, you can send money in the world at the speed of light. Like I mentioned with our current financial system, transactions usually take a few days to reach finality. All Bitcoin transactions reach finality in 10 minutes. But with new technology such as the Lightning Network, they reach finality in a few seconds. All right, a few misconceptions about Bitcoin, because there are a lot of misconceptions about Bitcoin. Everything I'm about to mention is false. Bitcoin mining will lead to climate change. That is just not true. 70% of Bitcoin mining uses renewable resources, so it's more clean than it's not clean. Bitcoin is a scam/Ponzi scheme. That is just simply not true. I'm not even going to elaborate on that further. It's been around since 2009. It's not a scam. Since we don't know who created Bitcoin, it should not be trusted. So the person who created Bitcoin, he used the alias of Satoshi Nakamoto, and he chose to stay private because he knew that governments would not like his new invention. But you really don't need to know who created Bitcoin, because the code is what is called open source code. And open source code means that the code is publicly available for everyone to view. So you're free to download the code, copy the code, request a change to the code. So yeah, we could all verify that the creator isn't going to steal everyone's Bitcoin. And even if he stole everyone's Bitcoin, everyone would then sell, and then it would be worthless. Bitcoin is primarily used by criminals. That's not true. Only, according to a company called Chainalysis, only about 1% of Bitcoin transactions are actually used for crime. Compare that to 4% of cash transactions. Bitcoin has no intrinsic value because it is completely digital. This is not true. Most of the US dollars do not exist in physical paper. I think it's around 95% of US dollars exist only in a bank's database. Bitcoin has been hacked before. This is not true. Whenever I say Bitcoin has not been hacked, that means no transaction has ever been reversed because of what is called blockchain technology. Once a transaction has gone through once a transaction has been processed and gone through, it is impossible to reverse it because of the encryption that's involved. The developers of Bitcoin has complete control of everybody else's Bitcoin. That is just simply not true. With the open source code that I mentioned, there have been multiple people that have read the code and companies that have read the code that have verified that something like that would not be possible. Bitcoin is too volatile to be a currency. It is a little bit volatile right now, and that's because people are viewing it as an investment to try and get rich off of. But more and more people are looking at it as a currency rather than investment. So its volatility has actually gone down over time. And there's like a metric that is used to measure that, and it shows it's been becoming less volatile. Bitcoin has too low transactions per second. With that technology that I mentioned before called the Lightning Network, it causes the transactions to be much faster. Bitcoin is private / anonymous / untraceable. This is not true. Every Bitcoin transaction can be traced on what's called the blockchain. I'm not going to even bother explaining what that is, like I said. Okay, I'll go a little bit quicker here. Governments will ban Bitcoin. It's impossible to ban it because it's a decentralized network of computers on 6 different continents. I'm not going to go over that second one because I don't feel like explaining it. Nobody's using Bitcoin as a currency. They're only speculating on the price. There are a lot of people, especially in third world countries, that are using Bitcoin as a currency because their fiat currencies and their like government issue currencies have very high rates of hyperinflation. So they're actually using Bitcoin as a currency. Companies and governments don't own Bitcoin, aren't taking it seriously. There are multiple companies that own Bitcoin on their balance sheet and are, I guess, viewing it as an investment on that regard. One of them is, a few are Tesla, MicroStrategy, and Square. Bitcoin is unregulated. This is not true. The exchanges that you would use to buy Bitcoin, such as Coinbase is the most popular one, they're regulated under the Bank Secrecy Act of 1970, which requires anyone that wants to go buy Bitcoin in exchange for US dollars to provide identification first. It's too late to buy Bitcoin. Bitcoin's a bad long-term investment. This is just simply not true. It's slowly been going up over time. It is a little bubbly from time to time. But the overall average price has been slowly going up over time, and it's beat the S&P 500. It's beat like Amazon stock, Apple stock. Like it has been the single best investment, I think, within the past 10 years. I already explained that one right there. The developing countries, Bitcoin will be replaced by another cryptocurrency. Bitcoin has held the #1 spot by market cap since 2009, and it was the first cryptocurrency. So the fact that it'll be overtaken is very unlikely within the near future. And Bitcoin is too difficult for the average person to use. This is also not true. If you were to keep your Bitcoin in an exchange like Coinbase, it is just as easy to use as like a traditional bank account. Really, the only issue with it right now is it's not universally accepted by merchants. Oh, it's not going. Okay, and I'm not going to go over this because I've already been talking for long enough. It basically just shows like gold coins, paper money, digital fiat money, and Bitcoin, and it basically shows how like Bitcoin takes like the best of what all of them have. And if you guys want to learn more about Bitcoin, if you guys like want to, just like learn more about how the technology works and some of the stuff that I've been mentioning, there's this amazing documentary here. It's called Bitcoin: The End of Money as We Know It. It came out in 2016, and it like explains everything perfectly. I know a lot of documentaries are very boring, but I promise you this one's not boring. Like, they got like plenty of like cool effects, zoom ins, like the guy has a super cool voice. It's it's a really cool documentary, and it's only like an hour long. And yeah, that's the end. Yeah. Does anyone have any questions, or you guys can finish?
Yeah, you glossed over talking about how the central bank digital currency won't be a threat for Bitcoin in the future. Why do you feel that is?
Well, first of all, do you know what central bank digital currencies are?
Yeah, I mean, it's just like whatever the central bank of that country is, they have similar digital coins. I know there's one in China that's millions of users already.
Yeah. Well, okay, maybe I shouldn't have said that it's not a threat, but the difference between something like Bitcoin and a central bank digital currency is with a central bank digital currency, and let me go define what that is real quick. It's basically a cryptocurrency that the central bank, as in the Federal Reserve, would create. And the problem with this is, first of all, the code is completely closed source, which means we can't see what is happening with our money behind the scenes. Compare that to Bitcoin, to where, because it is open source code, we can actually see that where everything is happening behind the scenes. And then with a central bank digital currency, the government would have complete control over everyone's money. They could seize your money, freeze your accounts, like decide to like raise and lower interest rates at any time. So something like a central bank digital currency, in my opinion, is very dystopian because it gives more control of our financial system to the people at the top, while something like Bitcoin gives more control of our financial system to the average person, because now they could make internet payments while also maintaining sole custody of their money through the encryption that's built in. Okay, did I answer that well?
Yeah, it's perfect.
Okay, all right.
So you only talked about Bitcoin, but like, as like just new cryptocurrencies with like faster rates of transaction and like lower fees and higher security come through, like in your opinion, like what do you see the future, like 10 years down the line, if cryptocurrency is still, you know, a growing industry, like where do you see Bitcoin in relation to like better and newer cryptocurrencies?
Well, a lot of people gloss over the Lightning Network whenever they talk about Bitcoin. And the Lightning Network, I'm not going to explain how it works. I didn't even explain how Bitcoin works, because if I would have started talking about proof of work and mining and hashes and like you guys I would have lost you guys. But basically, the Lightning Network allows thousands of transactions per second, around a few seconds of finality, and very low fees. And the problem with the Lightning Network is it's still a little bit new. So I guess it hasn't been tested as much as like other cryptos have, but it's definitely a good looking technology. Oh, and another thing that's good about the Lightning Network is it protects privacy too, because a lot of people think that Bitcoin is private, and that's actually not true because it's completely traceable. There have been a bunch of like awful criminals that have been caught because their Bitcoin was able to be traced. But yeah, but like in my opinion, there's too many cryptocurrencies. Like if you go on a website called CoinMarketCap, I think there's around 20,000 cryptocurrencies. And so I'm very skeptical of a bunch of other cryptocurrencies. I really like Ethereum. I actually like Ethereum more than I like Bitcoin. And I'm not going to go over what Ethereum is, but there are a few other cryptos that I like. But the thing is that to me, it's like the .com bubble right now, and there's just like thousands and thousands of internet companies. Well, back then it was internet companies, now it's cryptos. So I am very skeptical of like everyone talking about like this like new crypto, and then it ends up being a scam like a month later. So
I was gonna say all like the top like platforms that do smart contracts more than just like a peer-to-peer cash, like what Bitcoin promises. They're not like anything that competes directly with Bitcoin. They're not up there on market cap at all. Like what top 10 doesn't have Bitcoin Cash or anything anymore, right?
oh yeah, like yeah, because with and like talking about smart contracts and market cap, Ethereum is actually coming up like very close to Bitcoin's market cap, and Ethereum has about half the market cap that Bitcoin does. And if you guys don't know what market cap is, it's basically like the amount of money that currency is worth, like the amount of money that is. I guess that's the best way to describe it. But yeah, when it comes to smart contracts, Ethereum is definitely the king right now. There's a few other smart contract actually no, there's a lot of other smart contract platforms that are competitors to Ethereum. And to me, it's just like there's so many of them. There's like 40 of them, like maybe even more. So it's like I'm pretty skeptical of a lot of them just because like there's so many of them. But I'm still definitely like paying attention to that. Did that answer your question? Yeah. Okay. Did you have another question?
Yeah, so I was just gonna like elaborate, like, so you think like Bitcoin's the most reliable just solely on its size and market cap? Or are you just saying you're skeptical of the other ones just because of how established and reliable Bitcoin is?
Yeah, well,
Just
Bitcoin
because
is.
it's the time that it's, just because it's the oldest? Is
Yeah,
that what you're saying?
well, like out of all the crypto, like Bitcoin was the first cryptocurrency, and the technology that all the cryptos run under, which is called blockchain, which I'm not going to explain because I'll lose you guys if I try and explain that. Bitcoin was the very first one, and like I said with Bitcoin, it's never been hacked, as in nobody's ever reversed a past transaction. So the fact that it's been going on for over 13 years at this point, and nobody has been able to reverse a past transaction, and it is currently the most trusted crypto is why, like, when it comes to crypto as money, that's why I trust Bitcoin the most. Yeah, like, does that make sense or?
Yeah.
Yeah, okay.
So I have no idea the exchange rate between Bitcoin and like dollars, but if there's only 21 million Bitcoin, if it's anything close to 1 to 1, that would only take like 24 people having 1 million Bitcoin for it to run out, right?
Well, the exchange rate from Bitcoin to dollars, it's like 50,000.
Okay.
Yeah, it's like 50,000 US dollars in order to buy a full Bitcoin. And like I mentioned in the presentation, you could buy a fraction of a Bitcoin. So you could just buy like $1 of worth of Bitcoin, and that'd be around like 10,000 Satoshis. I don't know the exact number, but basically you will never like the system will never run out of Bitcoin because there's always smaller units that can be used. It's like
The exchange rate isn't fixed, so if more people want it, it's gonna be worth more. So just because of that, it's not gonna run out.
yeah,
That makes sense.
yeah, it's like a supply and demand type model to determine the price.
And a lot of the exchanges that you buy on, whether that's Coinbase or Gemini or Kraken or whoever you use, you can just put in a dollar amount, say you want $100 worth of Bitcoin, it'll automatically, calculate what that is in Bitcoin, because it's, divisible up in, I think in the 8 decimal places. So you can go all the way down, you can buy, 1 cent worth of Bitcoin. It's not, like buying a stock where you have to buy, 1 share is always fixed to a dollar amount. You can really buy 1 cent worth of Bitcoin. So it's very divisible, if that also helps answer the question that you had.
How do you choose where to get it from?
Well, okay, so in order to actually buy Bitcoin, you would have to buy it using an exchange platform. And basically what an exchange is it allows you to exchange US dollars. All right, it allows you to exchange US dollars for Bitcoin. And I use Coinbase just because it's like the most, it's like one of the most like regulated ones, and it's one of the most trusted in the United States. There's a few others that are good, like crypto.com, Kraken, Gemini, but Coinbase is one of the biggest ones, so, yeah.
You said there are non-reversible transactions, like I get that, it's like encrypted and everything, and I was wondering though, like you said, it's not used for as much crime even as like dollars are, but remember there's like that pipeline that got hacked and they ransom people requested it in Bitcoin, and my understanding is they were actually, like the government was able to get some of that back, like how would that happen?
Okay, so this is how, I remember hearing about that hack, and then, and this actually goes into whenever I said like Bitcoin has never been hacked. And by never been hacked, what I mean by that is transactions have not been reversed.
Right.
However, whenever you hear about like, oh, you can just Google like Bitcoin gets hacked, and whenever that happens, basically what happens is the person, the wallet that the Bitcoin was stored in is the way that you access the wallet is using what's called private key. And the private key, that means whoever the hacker that stole the Bitcoin, they stored their private key on the internet, and then the government got their own hackers to like hack their servers
They got their
and retrieve the private key. So me, like where I store my private keys, I never have exposed them to the internet, and I keep them on a piece of paper in a location I'm not gonna tell you guys, but yeah, but like, does that make sense?
Yeah.
Okay.
Yeah, thank you.
Yeah. All right, anybody else?
I mean, my question kind of tailed off this too. As of 2 days ago, there were 2 people that just got arrested for laundering $4.5 billion of Bitcoin, and the government seized 3.6 billion of that. Is that the same situation where they found that key online?
I'm not sure about that. From what I understand, I think they tried to like cash out of that Bitcoin through an exchange called Bitfinex. And what the exchange did is they, since they're regulated and they work with governments, the exchange was able to figure out this was like illegally seized money. And because of that, they, the exchange was able to freeze the Bitcoin in the exchange, and then was able to, recover the money and like give it to whoever it was stolen from. But that kind of shows the difference between like keeping your Bitcoin on the exchanges versus on a private wallet. I don't know if I have time. I don't really have time to get into that right now, but just like keep in mind, if you keep your Bitcoin on an exchange where you used to buy it, they have control over it. And then if you keep it on a wallet, you have control over it. So the people that had their money seized in the hack or whatever, they brought it to the exchange, and then the exchange had control over it. And because the exchange now had control over it, and they figured out it was from a hack, then they did not give it back, of course.
Makes sense.
Yeah, it's pretty hard, like, you can use Bitcoin to launder money and to do illegal activities, but the problem is cashing out. Because when you cash out, you gotta bring it back to an exchange, and, let's say, you hacked some Bitcoin, everyone knows what wallet holds the Bitcoin. So everyone knows, okay, wallet ending in XYZ is holding some stolen Bitcoin. The problem is you don't know who owns the wallet. It's all anonymous. And what I meant by when you cash out, you bring it back to an exchange. Most exchanges in the US at least have know your customer, so KYC. So you bring it back to the exchange, you try and cash out, that's where they catch you. So yeah, you can use blockchain and the Lightning Network to, hold your Bitcoin if it's stolen. But if you want to cash out and get all of what you stole, good luck. You're going to get caught, 9 times out of 10 if you're using a US exchange. But you can look at some offshore exchanges that are a lot less regulated and sketchy. It may still not work, but I hope that kind of adds to what you're talking about, a little bit.
So in the last 2.5 years, I'm more of options than ETFs kind of guy, but I made Bitcoin about 7.5% of my portfolio. So it's enough, we'll just say that, right? Where, do you know the current tax implications of Bitcoin?
It's taxed as property as opposed to standard investment. Yeah, so it's not taxed like an equity.
Right, but if I was to sell all of them on, let's say Coinbase for some reason, or for some, would I just get a normal tax form? Or would I have to?
It depends on the exchange. The taxes suck. So they do report to the IRS, but it's up to, they don't usually send you. I think they're starting to now send, I guess it'd be a 1099, I think. I think they're starting to send those, but I know a couple of years ago, you just had to download your Excel file and calculate all that crap.
All right, thank you guys.
Thank you all. Appreciate everyone who came out.
Yeah, I appreciate you guys asking the questions.
Oh, and if any of y'all want to join the cryptocurrency club, you can just find us on Tiger Quest, do the membership thing, and I get an email when that happens. And I'll send you the link to our Discord where we, communicate out it. We get all our announcements through Discord, talk about our events, so that's where you can find out about it. So yeah.
Yeah, I think we should, we might as well just put the link up there.
Yeah, we can.
Yeah.
I just want to let them, because we don't have a lot of time left, so I wanted to let them get their presentation.
You can work it if you want, I'll be staying.
I probably should take this. I probably should take this 20 minutes. It's
All right, thanks, Mark, for that presentation. Thanks for everyone for coming out. So we're gonna kind of run through just the basics of modern investing, and this is gonna deal way more with equity investing and less with the crypto side of things. So I can kind of compare actually what Mark just talked about to equity trading. So you can kind of think about the institutional investor as someone who's dependent on the US dollar, sort of. And you can kind of think of a retail investor as someone who's more interested in accepting crypto as a form of currency. Just because this is the new wave of investing, is being a retail investor. So a retail investor, kind of as a general explanation, is us. It's the people who aren't going through big brokerage firms and sort of going through mutual funds, and instead investing the money themselves and deciding to manage it. And that can be done with the help of an advisor, but it's really you have the control of your money, and you determine where you place that, what stocks to buy, what assets, what sort of diversity you want in your portfolio, things like that. That's all up to you as a retail investor. So that being said, hold on, let me just go back to this. So these are some examples. So an example would be an everyday person, obviously. Examples of institutional investors are these huge banks, the ones you think of when you think of investing. So these are the pension funds, the money managers, insurance companies, investment banks. Really the huge chunk of all the money in the stock market, and especially US equities, is run by institutional investors. So just as a general question, just to kind of get an understanding from everyone, what percentage of US equity trading do you think is done by retail investors?
was like 10% 3 years ago, now it's like 20 now.
Okay. Does anyone else have any other guesses? All right, he's right on it. So in 2019, it was 12%, and that was the first initial spike that we saw. And the reason for that really was just new modern technologies coming out. Like the huge adoption of mobile apps in investing is actually why that kind of spiked. But within the past 2 years, especially because of the pandemic, well, I'll go to the next one. This is why. Especially the pandemic, that spurred a whole new wave of retail investors. And the reason for that was job loss, salary cuts, uncertain financial futures. These all encouraged people to go look elsewhere for how to make money. And that gave them time to sort of read themselves, gave them time to talk to family about what other people are doing, things like that. And that sort of encouraged you to go handle money yourself rather than trusting the banks. It sort of leads back to how much mistrust is in banks. People are starting to trust themselves more with how to manage their own money. And the social media and the internet has also supported that a lot, just because of the extreme access to information that we now have. So you can go learn about anything you want on the internet, obviously, which is now scaring financial advisors and other investment banks that want to take your money and want to show you that they know more about investing than you do, which is why they should charge commission fees and sort of take from the returns that you should be making. And so as a retail investor, the technology is opening the door a lot more because of these easy to use apps that allow you to literally just buy, many of us can just buy a stock right now, immediately enter into your portfolio. In fact, in January 2021, there were 6 million new downloads of mobile apps. So it kind of just shows how much more people are taking to investing and managing money themselves. Let's see here. All right, so this slide is just to kind of explain more about why now is such a good time to start educating yourselves on investing and not waiting until you do actually have large sums of money, because that is when you do want to run through a financial advisor, because they do know more about regulation, taxes, things like that, thinking towards retirement, thinking about kids and college funds. Those are things that financial advisors are experts on. But when it comes to where you want to put your money in certain equities, that should entirely be up to you. There's no reason why there's no reason why you should be going to a financial advisor for specific investment knowledge, because that can all be found through the internet. And that's kind of what I said in the first one there. The knowledge gap between advisors and customers has been diminishing greatly over the past couple of years, especially over the past couple of years. Another thing to note kind of for this year, especially the one coming up, is that the Federal Reserve is like ruining the party, if you will. So we've had a time of extremely low interest rates, stimulus packages, a lot of money is in the market, and people are going and spending that, they're investing, they're using what they now have. Despite COVID taking all that away, they're using this stimulus packages, they're using the low inflation to go make investments for themselves. Now what's going to be happening though, the Fed is going to have to tighten up on that. Inflation is kind of getting out of control. The market is extremely overvalued. And so what they're going to do now is raise the interest rates, and it's going to start hurting, not hurting, but it's going to start tightening the economy up. And so I don't want to give any sort of any sort of advice to what you guys want to invest in. And I won't answer any of those sort of questions just because I myself am not even certain enough of what the market's doing to sort of give any of that kind of advice. But what I can say is that a period of correction is going to be coming. That's kind of inevitable. It happens every single time the market becomes overvalued. So this is really the time to start teaching yourself, because when that correction does occur, it's obviously an amazing time to jump in. Another thing to note, I kind of already said it now, but the market right now, the valuation of it is really comprised of just 5 to 6 large companies. So as I say right here, the NASDAQ index, which is mostly the tech stocks, 6 of those holdings represent 40% of that entire index, which is kind of scary when you think about it, because the NASDAQ index and the S&P 500 index, that is supposed to show how the economy is doing or how the market is doing. And when you have only 5 or 6 companies influencing that, it does not show the condition of the market whatsoever. And when those companies do, the day of reckoning will come for them, then that's probably when we're going to see a correction happen. Another thing to note here, at least in the past year, that's been sort of extremely, you can't see that bottom thing, I guess, but it says negative 10% return, which is extremely new. I can't give you the exact year when this happened, but it's been over 30 years since that's actually happened. where IPOs have raised the most capital, or well, they've raised the most capital in any year this year. But they're averaging a negative 10% return, which is insane, because in the past, when a company releases their stock to the public for the first time, which is what an IPO is, it almost always increases after that because of the influx of people. The stock market is an auction market, which means if a bunch of people want to buy a stock, that stock price is going to go up. And so when an IPO is released like that, not companies, but people and other institutional investors want to get in on that company quickly before it increases. Now what we're seeing though is that these companies are overvaluing themselves based on where the market's at, which is causing negative returns because people are kind of skeptical about this extremely high valuation that they're giving themselves. So Andrew's kind of going to go into, oh yeah, go ahead.
Do you believe that the influx of retail investors has anything to do with IPOs going down? Because now retail investors have access to IPOs rather than just institutions having access?
I don't know if I credit that to this big of a jump, but I think that's definitely supported, obviously, but I think it's way more about the pandemic, but way more about the mobile apps, which is what we're going to get into here. And that's sort of the disruptive technology we're hitting on, is how in the past, you'd go to these financial advisors, you give your money to investment banks, they'd handle it for you. They have the information, they have the research, they know what to do with it. Now what we're seeing though, is people are reading more. Companies are understanding that you can go to an app now with no fees and go invest yourself and obtain all the returns from that growth. And so companies are getting scared of that. And so now they're offering new platforms to educate yourself, to invest for free. They're lowering fees. It's really only making it easier for retail investors to come into the economy and start investing for themselves. So I think honestly, these financial firms are going to start supporting retail investors a lot more as they see how popular it's getting and how negatively people are viewing these financial institutions.
So now we're going to talk about how to start investing with no experience. Now, and a lot of you may think that investing is really complex with all the financial equations you have to deal with and all the evaluations. However, we're going to try to break it down really simply so you guys can start investing in stable securities. So step one is you really want to understand the current market conditions, and some really key figures you want to look out for is GDP growth, inflation, employment growth, housing market and stock market performance, interest rates and monetary policy. These are only a couple examples. However, I mean, there's so many different metrics you could pay attention to. Some good sources for this, the St. Louis Fed. This is a great website. You can just go on the website from the link there and just type in GDP or inflation, and it pulls up a whole graph of the history of inflation. And you can see a little gap in 2020 where we had a lot of problems with GDP, how it kind of dropped off. So it's a really interesting site. Also, you can use the US Census Bureau. There's so many websites. You just type in trends on Google. You can try to search all these trends, and they're super easy to find. So that's step one, just trying to understand the economy, where it's at. Step two, we want to determine potential companies. So I kind of came up with this 3-step framework. So number one, familiarity. So this is really just companies that you kind of interact with your day-to-day lives. A good example of this is just Apple. I'd say most of us have some sort of Apple device. So that's a great start. You kind of are already familiar with the product, or maybe familiar with what the company plans to do in the future. So some good questions, are you familiar with the product? Are you a customer of the company? What products or services can you not live without? Investing in companies you're already consumers of, I believe, is the best way to get started since you are already hands-on with their products. Number two, optimism. Do you believe the company's product or service will be around for the long term? So based on your current experiences, do you believe the iPhone will be around for the long term? I could probably say most of us would say yes, unless there's another big player in the market. Who is the competition? Does the company have competitive advantage? So again, with Apple, they got Samsung, but how well is Samsung doing compared to Apple? Probably not as good. So you can kind of look at those initial features. Again, peer review, step three. So why do you believe other people think they like the brand? Do they have positive or negative experiences with the product? And are they constantly using the product? So this is just really kind of paying attention to your surroundings, paying attention to your own wants and desires, trying to figure out what people think of companies and how you can make potential investment decisions. Now, step number three,
We're gonna do a quantitative analysis on a selected company. So these are some various aspects you wanna look at when you're trying to evaluate a company from a quantitative aspect. So number one, you wanna look at the management team. So who exactly are the CEOs, what are the previous positions, and how have they gotten to the position where they are today? This is really important because you want to understand their vision for the future. This kind of leads us into the vision, mission, and value statements of the company. And so you really want to understand these to see where the company could potentially grow in the future and how much they're looking to innovate. Next, the product offerings and key drivers. So this is really want to focus on what products do they currently offer. Are they looking to offer any new products in the future? What are they trying to do? Are they trying to innovate their current products? You just want to figure out if the company is kind of playing it safe or taking risks. Next, supply and demand for the industry. So is the industry and the company growing, shrinking, or stagnant? How has the previous growth been? And is the company constantly innovating? Again, this is just incredibly important for determining potential investment decisions. And then lastly, growth factors and risks. So what problems has the company faced in the past? COVID is a very common problem that many companies have experienced, and it's really the strength of a company is determined to how well they handle that situation. And there's many tech companies, as we saw, that came successful out of COVID. Again, what problems could potentially occur in the future? What are the company's growth expectations, and are they planning to release new products and services? So again, you want to consider all these factors when looking at a company from the quantitative perspective. Next, so these are some basic ratios that you probably want to be familiar with. Now, I'm not going to go over each one. I'm not going to try to make this a finance lecture, but these are very important ratios that pretty much all stocks are evaluated upon. So if you just do a basic Google search, you can try to figure out what each of those means. But this will just help you evaluate companies and compare them to one another. So next we're going to do a trend and peer analysis. So these are two methods of trying to figure out how well the company could grow in the future. So first we have peer analysis. So this compares financial ratios to other companies in the same industry. So based on the financial ratios in the previous slide, you're basically just going to compare of how well they're performing to their competitors. These are two great tools. So Zacks.com and Seeking Alpha, they both provide great tools for peer review. If you type in Apple, for example, on either of these sites, there's a section that says peer review, and you can see all like earnings per share, price per earnings ratio, and it shows all the competitors and basically how well the company stacks up. So that's a phenomenal source for comparing financial ratios. Then we have trend analysis, which basically compares the company's financial ratios to itself. And this is very critical to make sure that the company is actually growing and not shrinking. And a great site for this is Yahoo Finance. Yahoo Finance is one of the best sources you could possibly use. It also shows, the PE ratios in the past and expected PE ratios for the future, as well as earnings per share and the like. So in terms of softwares and apps used to get that started with investing, number one, we got Robinhood. I know this is kind of it's definitely a conflicting application. I know that they had some issues in the past, but despite all their issues, I think we can all agree it's so easy to use for any new investor. And it offers a lot of great features like news reports, weekly newsletters, has really basic financials and ratios. So it's not too complex where you can't understand it, but it does include, price earnings per share and the like. And it's commission free, which is also great. And next we have Webull, which is a little more complex. They have a lot more financial tools for technical and fundamental analysis. They have earnings reports built into the app, which is really great. It's definitely a little more complex. So if you're brand new to investing, I wouldn't highly recommend it, but it is a great choice next to Robinhood. And they do also offer commission-free trades. And Public is also another really interesting app because it incorporates kind of a social media aspect to it. So you can kind of follow your favorite investors and see what they're investing in and how they think the market's going to go. So that's a really great platform as well. And all of these are commission-free trading, which is a really great start for any new investor. And then here's just a list of really good research sources. I kind of mentioned a couple already. So we got Yahoo Finance, Seeking Alpha, Wall Street Journal, MarketWatch, Bloomberg, Zacks Finance, Google's Finance, Morningstar, and Barron's. These are all really good sources I would recommend, and they're all very credible. So anytime you're trying to research a stock, always look for these resources as they tend to provide the most valuable data.
All right, and then one thing I definitely wanted to show everyone, people who are in finance probably know this already. So this is a website, or what is it even called actually? It is a website. It's called Virgin Online. So this you can access through your library account in Clemson. And what it does is it gives you access to a database of investment research. And it gives you more than really any other any other free service out there for sure. So it gives you information on their executives, ownership, financials, price. I mean, it gives you pretty much everything you need to know. In a world of sort of financial services, this is what the analysts do for investment banks. They compile this information, put it into reports, and then provide a recommendation to the higher ups and the portfolio managers. And there is not one, I guarantee you, there is probably not one thing that they are listing in terms of numbers that is not listed in a database like this. And then the last thing I kind of wanted to hit on was just what we do as a club. So the approach he just showed you is really exactly what we do. Oh my God. So it's that step-by-step approach where we start out, understanding the economy as a whole and determining sort of what sectors are going to succeed in the coming year. So last semester, we determined materials, industrials, technology, consumer discretionary, real estate, and energy are going to be the most interesting to look at. And then from there, that's when we kind of narrow it down to specifics of sort of the makeup of your group. So we sort of separate into 4 to 5 sectors or industries. And then from there, analysts are kind of assigned to each group. And that's when we narrow down to a specific emphasis to focus on. So for example, aerospace is kind of an interesting one to look at. Yeah, it's been in the news recently, but it's sort of not one you would immediately narrow down to for materials and industrials. But in that group, there was an analyst who was a grad student majoring in aerospace engineering. So that was kind of an interesting thing to look at coming from his perspective, having no investment knowledge, but a ton of knowledge in that field in general. So his knowledge coming together with kind of the more of a finance side of looking at it, it was really interesting to see sort of the research they came up with. And then that's when we sort of select the companies. So you dive into it. I think he ended up selecting GE Aerospace, which I didn't even know much about before he started presenting. He had a lot of things to say about that. And then from there, you go to perform the step-by-step analysis of kind of comparing the ratios to the other competitors in the industry or even within that emphasis. And then this is where we have our kind of ongoing competition between the industry groups and the club. That's sort of how we kind of keep more of a fun appeal to like research-based investments. And then the last thing is our big meeting at the end of the year where we do a recommendation where one final stock is chosen from the industry and presented to the club as a whole and our advisors. And then what we do is we take that stock and actually submit it to the club's portfolio where we can kind of see the progress of it in the next semester after a winter break or a summer break happens. If anyone doesn't have any questions, we can have them take over. Does anyone have any questions though? Nope. All right. Perfect. All right, you guys want to take over?
Okay, yep. Not to keep everyone here, because I know there is a basketball game someone's probably want to go to.
Yeah, this will be super quick.
Yeah, this will be about 5 minutes to talk about what we do in Clemson crypto. And of course, appreciate your time here tonight. Try to make it.
Oh, yeah.
All right, quick, thank you guys all for coming. My name is Louis Grana, president of the Clemson Cryptocurrency Club. Started this back in February of last year. Really, my goal for the club is I want Clemson University to have the premier cryptocurrency organization in the Southeast. So that's what we're working towards. Yeah, some of the stuff we do. So we host speakers from different crypto companies. We have a partnership with a company called Encode. They're basically a VC fund out of the United Kingdom. So they do a lot of angel investing within decentralized applications and other crypto startups. So we had their co-founder speak to us last week. It was a 101 about decentralized finance. You can find that on our YouTube page. It was really good. So we try to bring in speakers from different companies, and I'll get to this really quick, but we're looking for someone to kind of take on the reach out portion of that. So I'll get to that quick. We also have partnerships with crypto companies, which is something we're really working towards. So, we want to partner with companies and have them provide us projects to work on, give us some direction. So whether that means participating in hackathons, accelerator events, just, working on coding tutorials, anything like that, we're really looking to partner with people, different crypto companies. So that goes along with the events that we do. We also are going to be providing coding tutorials
which will be led by Mark here. So we're really gonna try and have an emphasis on Ethereum programming. And any of you, I don't know if any of you guys hear code, I don't, but the language used in Ethereum and in cryptocurrency, you will hear a lot of, it's called Solidity, similar to Python, but it's a little bit different. So that's something we're gonna try and work towards, really, there's so many talented people here at Clemson. So what I really am trying to do is bring, the best computer coders from comp sci, kind of mix them in with some people from finance, and I think a lot of great things can happen. So that's kind of where we're trying to go as well. And I kind of talked about that, participate in hackathons, accelerator events, other blockchain projects. Something that's really cool, our partnership with Encode, that company I briefly talked about, they have hackathons, right? So they'll partner with, any of you guys heard of Polygon before? Or excuse me, Polkadot in cryptocurrency? Some of you, they had a hackathon which was sponsored by Polkadot. So, right, you do the hackathon, you create a dApp or something cool, right? And then if your project is good enough, they move you onto the accelerator stage. And with that event, what that really is you work with the core devs from Polkadot or from XYZ protocol. They really help build your idea up. It's like one-on-one, mentoring and networking. Really build your project up, and then you can actually get to the last stage of that is the launch, where you actually get an investment from Encode, and your dApp and your dApp or your project or your company really makes it to the next stage. So perhaps that's something that our club could work towards, and we'd certainly like any help we can get from all you talented people as well. So next slide, please. Thank you. All right, yeah, meet our team. President, me, Vice President Brandon, Treasurer James, not here, PR Chair Callie. Head of coding, Mark, and faculty advisor, some of you guys econ majors, Professor Gerald Dwyer by chance, yeah, good guy, our faculty advisor. But if you know any other professors, we're into crypto who sound like they might align with kind of our ideals, hit them up, we want to work with them. So yeah, you can go on, thank you. Yeah, so what are we looking for? Company outreach chair. We really only have 2 or 3 partnerships currently, one with Encode, one with this NFT kind of platform called Crypto Grads, and they will actually be giving our next one-on-one event. Date has not been established yet, but they're going to be giving a one-on-one event on NFTs. So we're going to be talking about things like algorithmic layering, minting an NFT onto the blockchain, talking about the implication of gas fees and kind of how to divert away from that. So it should be a great event, and you'll hear from that. You can follow us on our social media. Yeah, so company outreach chair, and then we're really just looking for someone to kind of record our meetings, using Zoom, maintaining our tag request. We use something called listserv, where basically we send one email and it goes to everyone in the club. So kind of maintaining that. But that's also someone we're really looking for. But have an emphasis on the company outreach chair. What are you going to be doing? Good question. Sending emails, reaching out to companies. Anyone here is from comp sci, Clemson University is partnered with IBM and Hyperledger. I believe Hyperledger is like IBM's enterprise blockchain. So using blockchain, but for companies to maintain and store data. So maybe reaching out to them and trying to get them to present to us, but not limited to, companies like IBM. We want to reach out to dApps, any of you have heard of Uniswap or SushiSwap. We want to really get out there and bring in some people, some devs from those apps, to come and to talk to us. So that's what you'd mainly be responsible for, just reaching out and getting our foot in the door with some of these people. It can be hard to reach, certainly. Yeah, and if you're interested, just come up to me after, or you can email us right there, clemsoncryptocurrency@gmail.com. We just have a date and a time to talk and, see what we can do. Next slide. Thank you.
Oh,
is it? Oh, all right. Well, that was supposed to be our social media app, but it's not. You can find us on Twitter at Clemson Crypto, Instagram, Clemson Cryptocurrency. We're on LinkedIn, Tiger Crypto. So you can really find us anywhere. Just come up to me if you have any questions or stuff. But that is that. And I did that in, what time is it?
You did that in 5 minutes.
5 minutes. Great. Let's do
Any of y'all are interested in either of the clubs, just come talk to us. You can find both of the clubs on Tiger Quest. It's like a join button.
And thank you, Nick and Andrew for having us. It was a pleasure. And thank all of you guys for coming out. And yeah, thank you.
I think there's some more pizza too. So,
yeah, take the pizza. Take the damn
grab
box.
pizza for the road.